Good morning. We move to point 7 of the agenda, European Central Bank Annual Report for 2015. The rapporteur is Ramon Tremosa, and I will give you the floor. I will ask, we are a little bit late in our schedule, so I would suggest to give 4 minutes to the rapporteur and 2 minutes and a half to the shadows. Please, Mr. Ramon.
Grazie, Presidente. Dear colleagues, first of all, I want to say to you that it has been my pleasure to be again the rapporteur of this report. I was in 2011, in the last term. It was a very interesting year because it was the first time that the ECB bought public debt from Greece in this crisis. So and now it is also a very interesting year. Last year it was launched the quantitative easing from the ECB. And to prepare this report, I have had an interesting round of meetings with academics in different cities in Europe. And I also had one-day meetings at the European Central Bank, with several meetings with high civil functionaries on execution of monetary policy, on financial supervision, and a meeting with Mario Draghi of 1 hour. And also I used that day in Frankfurt to visit Jens Weidmann in the Bundesbank, because I know that there are so many concerns in Germany from different reasons, from all different political parties. So this is why I had the pleasure also to have about 2 hours discussion with Jens Weidmann about monetary policy in Europe and so on. I have to say that I wrote my PhD on monetary policy 10 years ago, so it is a question, it is an issue that it interests me so much, and it has been my pleasure to be the rapporteur. Briefly, you will see that my report, I will comment just some points. First of all, we have to recognize that central banks cannot solve all problems that we have. For instance, ECB is failing to prop up inflation in the Eurozone. We can see graphics in which you can see that the ECB balance sheet is achieving a record high, and in the same time, inflation expectation in the Eurozone is achieving a record low. So in this respect, we have to say that central banks are not omnipotent, and we have to recognize it, and this shows that there is a clear limit on what central banks can do, and governments cannot rely only on monetary policy to solve their problems. My general view is that the ECB is doing a good job, not a perfect, but a good job. The balance, in my opinion, is positive, and at least it has avoided a financial crisis in the Eurozone in the last years, reducing risk premium in some member states on its own public deficit. This has given extra time to the governments of South of Europe. Another debate is if these governments has used to do the proper job during these years. But we have to recognize that the ECB has given this extra time to these member states to do reforms, to tackle public deficits and so on. So I think that the report, what I have written, what you have seen, is that in general, I think that my general view is that the ECB is doing a good job. Of course, I have and I understand the worries about negative interest rates, and they have to be taken into account. We are entering in unknown fields, not only in Europe, also in America and in Japan, and the future of commercial banks and small saving banks is at stake. We don't know for how much time, how many years this situation will last, and I really understand the troubles that the concerns that this monetary policy is generating in many member states and in many financial institutions in Europe. In my opinion, I think that the quantitative easing should change its composition. In some member states, like in France or Spain, this quantitative easing is just using to finance more cheaply their current expenditure. In my opinion, quantitative easing should be more targeted on real investment that enhances growth and generates jobs. This is my personal opinion. but I think that it's an interesting point to discuss, and I expect your amendments and discussions on it. And finally, there are also concerns because we have some evidence that in the United States these extraordinary measures taken by monetary policy maybe are increasing inequalities. So in terms of social income difference growing up. So I think that we have to be very vigilant if the ECB policies, extraordinary policies, are generating new bubbles, for instance, housing bubbles in big cities and so on. Thank you very much for your comments.
Thank you. We start now with Mr. Thomas Mann for the EPP.
Thank you very much, Chairman. I'd like to thank Ramon for, I think, his excellent draft. And the discussions he's reported back on, I think, have certainly been able to be in line with our report. I think the direction is the right one. Now, first of all, I think it's quite important that even Mario Draghi is saying that the monetary policy conducted by the ECB are not enough on their own. They can contribute. However, countries have to do their bit. In other words, structural reforms have to be tackled, even if it's difficult. There has to be solid budgetary management. There is no other way. That cannot be replaced by the monetary policy. And we have our concerns about interpretation of the task of the ECB, where they talk about price stability. Now, the fact that the investments were so high in 2015, as Ramon said, the purchase of 1.1 trillion worth of the asset purchase program. Now, of course, we can try to create the right environment. However, this kind of expansive monetary policy, I think, leads to questions. Now, isn't the ECB on the edge of its mandate when it comes to preserving price stability? Maybe it's going beyond it. Now, if they're trying to prolong a rather loose monetary policy, then I think the effects are bound to be diluted over time. Another issue is these large asset amounts. Doesn't it mean there might be a bubble in the real estate market? That danger is present. So I welcome paragraph 11, where Ramon has said that the ECB should conduct some studies. I think that's very important. We also need to look at the impacts on various banks, for example, as we're seeing in Italy at the moment, where clearly we can say that in some banks there's 360 billion non-performing loans which might not be recovered. That's very risky. Now, expansive monetary policy, of course, might be an important tool. However, it certainly doesn't preclude the member states from having to carry out the necessary reforms. So I'm sure we're going to be debating this. It's not enough for the ECB to carry out its monetary policy alone. Thank you.
Thank you. Mr. Jonas Fernandez.
Muchas gracias.
Thank you very much, Chairman. First of all, I very much welcome the work done by the rapporteur, who's presented a draft which I think is well balanced. It's going in the right direction, and I think it's an excellent basis for our discussion over the next few months until we have a final version. Now, this is a key document at this time where monetary policy and its attempt to solve the crisis in the Eurozone has been subject to much debate. And certainly it has been responsible for the extent of problems in the Eurozone that we've seen in the last 2 years. Now, the quantitative easing and the non-orthodox monetary measures, there's been a discussion about that and the extent to which monetary policy can actually resolve the crisis. Now, with these new measures that are trying to trigger growth and actually bring up inflation, that's the ECB's aim. However, I have my doubts about whether that's working. We're facing a crisis of liquidity, and we need a different fiscal policy, a more active fiscal policy. Certainly, the objectives of having inflation coming up to 2% cannot just be the preserve of the ECB. We also need an accompanying fiscal policy. Now, I think the document is good, the main lines, also with respect to the independence of the ECB, as long as it's not being confused with the debate that we're having here. But I'm rather worried about the inflation targets, because I think we have a huge problem when it comes to fiscal policy. I also have some areas where I disagree and where my group would like more discussion. Obviously, we don't agree with the vision whereby monetary policy has prevented the deficits of the member states being solved. I don't agree with that. Now, as to having more measures of expansionary monetary policy, well, there could have been more measures, not only increasing the current financing package, but other measures, for example, financing for households. And I also think that we can compare the activities of the European Central Bank and other central banks. This morning we've heard about the new measures for the Japanese Central Bank. Maybe we can learn from what's being done elsewhere. And it's important to say that this monetary policy could also lead to greater inequality, to bubbles, and all of this leads us to revise or to recognize the need for fiscal policy. And then last year, and the debate we're having on the fiscal capacity of the Eurozone, I think part of the profits or the benefits could go into the fiscal pillar for the Eurozone. Thank you.
Okay, not Mr. Berlucke, but okay, ECR as a speaker, please.
Herr Vorsitzender, ich möchte meinen Kollegen Lucke entschuldigen und sagen,
I'd like to present apologies for my colleague Mr. Lucke, and I would like to present his statement.
Emphasizes the economic slump the euro area is facing, as well as the risk of the low interest rate environment the ECB maintains. There are other points raised which the ECR cannot support. Among others, the rapporteur attributes divergences in interest rates to market failure. The ECR would like to emphasize that we see no indication for market failure here. Instead, the market depicts different risk premia. Also, the report claims that the ECB's low interest rate policy stimulates credit to real economy. It neglects to deplore the development of the government bond holdings of monetary and financial institutions in the euro area in this regard. The ECR is especially concerned about this monetary financing of government debt. What should be especially pointed out is that the report states that the ECB was within the terms of its mandate in adopting extraordinary measures to lift inflation back up to the medium-term objective of 2%. Against this backdrop, the ECR would like to recall the prerequisites defined by the Court of Justice that have to be met by any purchase of government bonds of member states of the Eurozone on the secondary market by the European System of Central Banks, ECB. Purchases are not announced. The volume of the purchases are limited from the outset. There is a minimum period between the issue of government bonds and their purchase by the ECB that is defined from the outset and prevents the issuing conditions from being distorted. The ECB purchases are only government bonds of member states that have bond market access, enabling the funding of such bonds. Purchase bonds are only in exceptional cases held until maturity, and purchases are restricted or ceased, and purchase bonds are remarketed should continue the intervention becomes unnecessary. In the ECR's opinion, these requirements and the discussion whether the current APP program meets them should be part of the committee's report. Thank you very much.
Thank you. Fabio De Masi.
First of all, let me thank Ramon for his draft and also belated congratulations to the PhD 10 years ago. I think it's a wonderful timing. First of all, we agree that monetary policy alone cannot stimulate aggregate demand, but that it must be complemented by fiscal policy. And because Mr. Sabati this morning introduced John Maynard Keynes, John Maynard Keynes would have said, you can pull a string, but you cannot push it. Again, we differ on the specifics here in the report and would rather connect this with a critique of austerity policies than a call for more structural reforms, which also had a negative effect on aggregate demand and on private demand. We share also the concerns regarding negative interest rates. We are very much aware that the negative interest rates are a response to the overburdening of monetary policy, and that the ECB per se is not responsible for that environment alone, but we are very concerned and we think that negative interest rates cannot force investment or credit demand if aggregate demand is lacking. We also share the concerns that APP fools asset price bubbles as long as the liquidity is not recycled into public investment, and henceforth we welcome the rapporteur's proposals that the APP program could be more effective if it supported public investment through IAB or member states' bond purchases. Also, we would call for even broader categories than the rapporteur. There's certainly always some criticism involved of moral hazard if ECB would support public investment. However, the same argument would apply when you buy corporate bonds, where you also make selective decisions. Lastly, we have a different view on the ECB independence. We think it should have instrumental independence, but political independence, even though we do not share the criticism of the ECB voiced, among others, by Wolfgang Schäuble. We do think the ECB's policy decisions should be subject to democratic scrutiny and control. We are very critical of the ECB roles in the negotiations with the Greek government last year and before, also with Ireland and Cyprus. Lastly, we are worried by the development of a persistent Eurozone current account surplus, specifically in Germany, which is not a sign of economic strength, but a symptom of depressed economic demand and permanent undervaluation of the German economy, and this indeed could threaten the existence of the euro itself. Thank you very much.
Thank you. Mr. Urtasun. Ja, please.
Ich vertrete Ernst Urtasun, unseren Shadow, der leider nicht hier sein kann.
I'm standing in for the shadow who unfortunately can't be here. First of all, I would like to thank the rapporteur for the excellent quality, as it says here, of the report. There are just 4 points I'd like to raise from a Green point of view where we don't agree, and we will be making some proposals for despite all of the unconventional measures, the ECB has been failing in its objective of price stability, and we don't expect that it will be able to do so in coming years. And we think that this shows that the inflation rates which are forecasted are no longer stable, and recovery forecasts and also the elimination of debt is made more difficult as a result of that. Now, in our view, there are production gaps at the moment that is suboptimal, and we will be presenting some comments on quantitative easing and its impact on economies, and also talking about the institutions, particularly with regard to the supervisory role of the central banks and the necessity for reform. So those were the main points, really. And Mr. Orteson also said that he is expecting constructive cooperation over the next few months, and I'm sure that that will be successful.
Grazie, Presidente.
Thank you, Chairman. I'd also like to thank the rapporteur for his draft report. And I'll go through the points now. Now, one positive point is to raise the fact that monetary policy is not able to reach the price stability objectives, and it recognises the fact that the EU is in a dramatic position. Now, we cannot keep saying that it's due to the lack of application of structural reforms, fiscal discipline or demographic trends, because we're facing a liquidity trap. Now, there is liquidity, but it's in the wrong part. So there are various different points that need to be developed. On the economic situation in general, we should underline that the solution for the real economy to create inflation and investments is in fiscal policy to support demand. If we don't focus on that, then there won't be any economic recovery, and liquidity will remain trapped. So we need more massive investment. We have to avoid the distortions of the euro. We've got to say how the exchange rates constraint leads to the surplus in Germany and the wage drops in the southern countries. So the situation is unfair because of the euro. And then on the risks of financial stability, there are distortions that haven't been tackled. For example, banking separation from the crisis of 2008. So it's essential to mention these that give rise to distortions. And on monetary policies, we need to talk about the fact that there have been insufficient results of quantitative easing and programs such as the TLTRO. Now, they've been mentioned briefly, but they do need to be analysed in greater detail. Then finally, on the banking union, now there's a specific report on that. However, it does have to be mentioned in the ECB. We need to mention the asymmetry in terms of supervision of some of the banks of Southern Europe and then the northern ones. Asymmetry in the regulations which focuses on credit risk and financial risk level assets, and systemic problems linked to the bail-in, because the rules, if they're applied, might make the whole thing collapse, so the rules need to be revised. Then shadow banking and in general of the capital market union moving towards greater financiarisation of the system. I hope we can put all of this in the report. Thank you.
Sir Annemans.
Thank you, voorzitter.
Thank you very much, Chair. I'd like to start by welcoming the report from Mr. Veld. We quite like it because it is more critical than the reports that we've had in previous year. It criticises both the euro as a currency and also the ECB and the role that it plays. So we have a preference for this than for some of the other reports. But there are some criticisms here also. The fact that member states are abusing the system and anchoring themselves in the debt system that the euro has become. And we have a rather unusual situation now, and where saying that debt is fine and sidestepping sanctions, and that goes hands in hand with the way that we need to continue to work to keep everything stable. Thinking back to the debate that we had on fiscal and budgetary capacity, there's not a democratic scope for that, and there is a criticism of the rates. Savers are suffering, pensions such as in the Netherlands are suffering as well, and all of that is mentioned in the report without specific mention of the rates and the links. And I think what the issues we need to address are touched on in the report. I think we need to talk about the differences between the different countries and also in the banking sector. And of course that has consequences. And we just see a glimpse really here of what the real causes are of the deficiencies in the euro system, because it's trying to harmonize where it is important to have diversity. And so there is some criticism here of the ECB, but from our point of view, far too little, and also the consequences are not drawn from the criticism. The problem is the euro. It is the cause of the distortions. It's the cause of the imbalances and the fact that Europe is not able to get out of the difficult situation it finds itself in. And it seems that countries are being asked not to be too critical of the ECB, but that wouldn't be a very democratic approach in our opinion.
Thank you very much. Now we can give the floor to the rapporteur.
Thank you very much, Mr. President. Just some comments. First of all, I invite all of you to be active in this report. I know that it is a not binding report, but the ECB in the last years has taken into consideration many of our contributions. For instance, it was thanks to this report in the last term that we achieved the publication of the minutes of the ECB Governing Council meetings. This is why I ask now in the report for the publication of the names, but at least we got 3 years ago the publication of the minutes of the ECB Governing Council meetings. Or I want to remind you that we also achieved, and every year now is published in the ECB Annual Report, the publication of the flows between countries in the Target 2 program of the ECB. I remember that 5 years ago it was a concern of Hans Werner Sinn and many other German academics. And now we ask for the public to have this information every year in the annual report. So this is why I invite you to spend some time. Of course, we cannot talk about fiscal policy, as Mr. Jonas Fernandez asked, but we also can give some indications. No? For instance, you know that Spain now is under threat of a fine because of an excessive public deficit. I want to, today, Prime Minister Rajoy has said that it will increase taxes to enterprises, but he can also cut military expenditure, which has grown a lot in the past years. So this is one opinion that we also can give. And also, I want to invite Mr. Thomas Mann and IPP Rapporteur, Shadow Rapporteur, because we can ask in this report to put a special focus on real estate bubbles and the generations that these extraordinary measures that ECB is taken we can alert, we can warn the ECB to focus and to investigate if there is this situation. And the same we can say about what is happening in terms of income distribution. Of course, monetary policy has a distribution, and in my talks of Mario Draghi, he told me, of course, there is an impact distribution, and maybe through financial market we are giving more money to people that can invest in the stock exchange, and there will be potentially an increase of the income distribution. But which is the cost in terms of social distribution of doing nothing, of no extraordinary policies? So this is also have to be taken into account. And this is why I invite you to be active in this report. My strategy is to try to achieve as many consensus with the biggest groups as possible. With the mandates that we got, that we give a democratic mandate to the ECB. in terms of publication of the minors, publication of the floats of the target 2, if we are 500 votes in favor, 600 votes in favor. So this is why I will try to achieve a great consensus with the main important points. And of course, there will be votes according to very specific positions of different groups, which I respect. So I hope that we will have very interesting debates. So I wait for your amendments and further discussions. Thank you very much.
Thank you very much. The deadline for amendments is 22nd of July. Consideration of amendments will take place the 10th of October, and the vote is expected to take place the 11th of October in order to be able to vote the report in the plenary on November 1 session. Thank you. And now we can move to